Good morning, everybody. It's Christopher from SERENE Education with the 4 majors and latest update for the 9th of September 2011. Hi guys. Let's have a look at the 4 majors this morning for Friday, the 9th. Let's have a look at the Euro to start with. Okay, so yesterday's candle. Oh, I did mention yesterday morning, I was just talking to our students online, and I did say if it stayed under this 200-period institutional moving average yesterday, that we could see further extension lower. The same was for the Euro-Japanese yen, was another pair that we looked at closely yesterday, and well, any Euro pair, cross pair, also saw a lot of selling yesterday, and yesterday was no different. Massive sell-off yesterday on this pair, taking it well below the institutional moving average, well below the previous support in this case, roughly around the 1397-ish mark, and heading down towards the wick. Those of you who trade wicks, it's here at 138500. A slight pullback over the Asian market session trading, but looking at the European session open this morning, we're back down towards that lower end of the wick, signaling further selling in that consolidation range. If you look at the daily, you can see here at the current level of 13, we have got some support and resistance, 1300, 13800, or 13850. There is slight consolidation. We are going into this consolidation range now. You'll notice here, for example, back in March, there's a consolidation range. So we've got to be wary of that. G7, guys, today is meeting, so we could see a bit of news coming out from G7 today. There's talk that they're trying to get the Japanese market to try and put together some sort of structure before they actually even think about doing the same thing that the Swiss government did recently with the intervention or pegging their currency. The overall trend for this pair being breached. You can see here, major trend, uptrend, bounce, bounce, failure, and breakthrough on the right hand side. So consolidation, if we do see consolidation against the trend, it might be here or in this area here before. Look at 138500 as a support for this pair. If we break below that, well, then we are definitely in free fall. We're looking at roughly areas here. We had further consolidation roughly at the 13700 mark. Below that, we're looking at way down here at the 13400. Below 400, we're looking for the ones with a very strong support and resistance. We have a slight pause here at 12900. Further, yet again, another one at 12600. So, yep, those areas there. Consolidation today, I think, would probably be right. Let's have a look at the 4-hour, hourly, all giving us negativity. But you can see the slight consolidation just below that 138500 mark I mentioned. Notice the huge sell-off, and we're back down towards these levels again. The trend, you can see a swing low, swing low, swing low. So the 4-hour trend is still in play, pushing price lower. Moving average all above it. CTC is well in our favor for this pair on the 4-hour. The same goes for the hourly. We are now heading towards that little break. So, do we see a bounce here? As I mentioned, 13850 is our support, consolidation support. So put that in. But you can see here we're seeing price starting to slow down. Notice the 50-period moving average acting as a great ceiling level for this pair. Just recently, there we go. You can see the trend direction. Dictated by the trend, swing low, swing low. Look at these shooting stars wicks here, failing at that area yet again, and we're down here testing this prior support that we saw yesterday. So price action, break below 1385, then we're going to see further extensions lower. Otherwise, what we do is could see consolidation today, possible move upside, and a retest of the major trend. Next pair is the US dollar against sterling against US dollar. Good old cable. We've had a lot of sell-off, and in the past 2 days you've seen consolidation. above a price support and resistance level here at the 15,900 mark. I'm just going for a set figure, round figure, primarily because we've had a lot of consolidation at that figure. So yeah, it's slightly higher, but you can see definitely here on the daily there is a clear support and resistance level here. That's below the 1600 mark. 1600 is another one, a major one. So we're consolidating now. Let's see if I can get this right. So you can see we're consolidating now. And the longer or the more resistance it finds at 1600, the more likelihood we can see a continuation lower. As I said, the breakout, consolidation, we had a push higher. Notice our price action on both these days failed to break and close above 1600. So psychologically, this is now a ceiling level, and we should see a continuation lower because of that. If we don't get that, then we want to see a break and close above the 1600 to confirm a potential pullback, and then we'll do that. But it's looking like we're seeing a ceiling level now at 1600, and hopefully we can see price, well, not hopefully, well, yeah, hopefully we can see price continue to the downside. This is purely for trading purposes. We don't like seeing currencies taking a whip, but in order to make a profit, we have to see price doing one thing or another. So in this case here, we need to see price pushing off now to the downside. You can see there's small trading range of the Asian market session, but we are trading at the low end of the wick going into the European session open this morning. So G7 meeting this morning. Any other news this morning? What do we have? We have PPI input month-on-month figures at 9:30 a.m. GMT for the sterling. That's going to be very, very important. The previous figure was 0.6%. They're expecting a forecast of negative 1.6, so a full 1% less than the previous figure. It becomes even less than that, then well, we're definitely going to see it not really helping the sterling at all, and we could see a further push to the downside. But ideally, we're looking at 15,900 as our first potential target. A break and close lower than that, then intraday we should be looking at possible targets of roughly down here at the 15,800 mark going forward. So be aware of that, guys. Intraday, you can see the consolidation we're seeing now at this level here, as I mentioned, 15,900. Oops, apologies. 900 overall, but you can see the consolidation taking place here. A lot of support at this area. You want to see a clear break below that. You can see the swings dictating price action here, moving lower, really pushing to the downside, not being able to break higher than that. Swing low, swing low, swing low, swing low. Shooting stars at this resistance level are giving indication of further downside movement. And now we're going to this consolidation pattern here. You can see that our highs haven't got higher. Here we go. Shooting star dictating that at a previous resistance level intraday. This is on a 4-hour chart, guys. See that resistance, big up candle, failure to break above that level and close above that one. The next candle pushed higher, sucking people into the trade, and then closing lower at this ceiling level, resistance level, at the resistance level. A shooting star, call that a shooting star. It's an exhaustion candle against the trend, and bang, we had the next 4 hour falling short yesterday afternoon. So that would have been great to give you an indication of further entry level to the downside late yesterday, last night, and sure enough we are still trading lower. Ideally want to be breaking below the 15,900 closing before we see potentially further lows. So make a note of that, guys. Next up is the US dollar Swiss franc. I've gone ahead and plotted a whole lot of our lines, support, trend lines, fib extensions, etc. Fib extension primarily because we've seen on the daily chart the US dollar gain strength against the Swiss franc up to this point here. Then we had a slight pullback and then the continuation. This continuation now has reached 100% of the initial upside move. So we could see consolidation occurring now because of that. You'll also notice that there's the institutional moving average trading just above price. So we also have that as a factor. Overall, I've plotted some lines here, also trend lines. You can see here the next trend, ideally coming here just above the 8,900 mark. That's also in tune Notice how we had price support and resistance level at the 8900. So we had support, then a resistance, and then we also had price support and resistance to the downside at the 86. So we're in this consolidation range here. There has been a slight consolidation at 88 where we are right now trading at the institution moving average and the fib extension. So slight consolidation here. You can see here hesitation at these areas at 8800. So we are in this the bigger picture here. We have entered this consolidation area. The upside move here really stayed. You could see that price actually stayed above that consolidation area, found support, and then bounced higher. We are now in this consolidation range. Of break and close higher than that would obviously see us testing the higher side of that, but we also got the institution moving. So we could see slight consolidation against the trend today. Because of that, pullback wise, if it pulls back to 86.50, then great. And that'll bring us to the other support and resistance trend line governed here on this line over here. So you can see I'm painting a picture, and that's how it's looking at the moment now. So all things considered, 86 intraday could be a possible target with the consolidation at the 88. So we just make a note of that. So we know 8800 strong support level above us. That's the fib extension 100% move. So we'll put that in. We have the 86 as well as price support and resistance level. Also add that in. Also very, very important. You can see I'm putting all those in. So if we can stay above this consolidation range, then great. We could see further extensions higher, as seen on the daily. But we could see consolidation against the trend, roughly 86.50 if possible. If we see a pullback, we could be seeing a price action pullback in this area here. So 86.50. Let's have a look. Go to hourly par, 86.50. There we go. So prior resistance. So we could say that intraday as our support level, price can stay above that, then great. We could see further extensions higher. Above us we have the 8800, so you know that's a strong ceiling level. So we are in this consolidation range. It is a Friday. We have a lot of upside movement here, extension wise. So we have, as mentioned on a daily, that ceiling level above us at 89. Yep. So institution moving average coming through at 88.50. So these all, you have to put all these in. So you can see, there we go. That's the next ceiling level above us. So you can see straight away, if we want to see further upside movement, then ideally we want to be trading above 8800 to see 88.50 as a potential target. As long as price can stay above the breakout area here. Last measure at the 85.50 mark before we see potentially a further pullback, and that we could see potentially price really falling back to 8200, which I doubt would see today. But as the Swiss government has pegged its currency at 1.20, it's got to be trading above that in order to that's where it's got to be. So we're still going to see further progression to the upside for the US dollar against the Swiss franc because of that. Last pair of the day is the US dollar against Japanese yen. Okay, let's look at the daily. Here again, you can see that price moved in conjunction with the Swiss francs pegging currency, and we saw price moving higher, breaking out of the so-called band or consolidation band that we saw for the full period of August. And then we saw a pullback. That pullback was still higher than the 77, which is great because that confirmed that we're still in an uptrend, breakout, consolidation. Then we saw potential for upside movement. Yesterday we saw price moving slightly higher, however not trading higher than the two previous ceiling levels that we saw here. They're quite close together. So definitely have a ceiling level at the 77.60 mark. Asian market trading has seen very little change at all, and going into the European sessions also trading at the low end of the wick. We do have the G7 meeting today. Apparently Japan is part of talks. They're going to be asking Japan to come up with some sort of some written agreements, how they're going to be doing their pegging before they actually even think about intervening the same way that the Swiss government has done, so without just doing it. They want to know how they're going to be doing and how they're going to structure it, etc. Blah blah. What their whole intention is, which is important. But yeah, as things stand, we're still seeing higher swings. This one here from here is moving up. So great. If you get fine price pulling higher than that, then great. Then you can see the 50 pair moving average acting here. CTC has two parts of the CTC has gone blue. However, we still haven't seen the CTC on either side, the most important, going blue yet. So still trading negative. Overall, the trend is still looking very, very negative. We only get that primarily, I think, if we pass above the 7,800 mark. Which is, if we get above that level, then we're looking at some clean edge at least the 7,900, and then we have another support and resistance at 80. The overall long-term support and resistance was here at 80. So as it stands now, the consolidation, definite support at 76.50. We've seen it bounce higher. Failure to break above 78. We'll see price just hitting this 50 pair moving average and just rolling over again. So we need to see price really moving forward. Consolidation wise today, G7 as I mentioned. Yeah, just pretty much that. Just G7s for all of today. Nothing really else other than that to talk about. So we have a ceiling level here at 77.60. Price needs to be trading above that in order to see further progression. You can see on the hourly chart, you saw a breakout of it. Not much movement, 77.70. But you can see where that's the high. This is where we are trading now. So lower swing from that one over there. However, we're still getting higher swings. That's dictating. Swing high, swing high, swing high, swing high, swing high, swing high. All the highs are swinging, so we're still higher. We need price obviously to break above 77.55 intraday to even look at 77.70 or even further progression higher. Otherwise, what we're going to do is see price finding a ceiling level here, because you can see here in the last couple of hours that 77.55 has been a ceiling level. Fair to see price trading higher than that would see price reverting to the downside, consolidating, and then just falling over to the downside. That's it for today, guys. Hope you have a fantastic trading day. Last day before we see the weekend. Nikki and myself are down to London this weekend. Nikki's talking at a all-women's event. She's teaching them about Forex, our actual trading courses. And then we have some students joining us next week for a retreat that we put on every year. It's just a small number of students that are getting together here with us in Wales. And we're going to be having them over the next couple of days, from Sunday, Monday, Tuesday. So that's going to be good fun. Looking forward to that. We're going to be teaching them some new things, some mentorship involved, a lot of new strategies, which is fantastic. So looking forward to that. But other than that, have a fantastic weekend with family and friends. Hope you had a fantastic week's trading. If you saw some really good returns and pat yourself on the back, well done. Those of you who've made simple mistakes, please make a note of them. You'll never learn if you don't actually look at the mistakes you've made and actually incorporate them going forward. So very, very important. Make a note of where you went wrong and what you can do to actually compensate for that. So very, very important. Other than that, have a fantastic weekend and trade serenely.